You're very welcome to this AIB Business Leaders Sectoral Focus, where we're going to look at adjusting to the new international trading environment. There's no doubt that the last year has delivered seismic changes and challenges for business around the whole question of trade. The landscape and the environment seems to be changing quite a lot, whether it's through COVID and supply chain challenges, whether it's through Brexit, which has now arrived. We're going to have an opportunity to talk about all of those things, and a little bit later on we'll be hearing from businesses themselves that are involved in exporting to the UK market, and they're going to talk about how they've navigated some of the challenges. But first, I'm joined by Oliver Mangan, who is Chief Economist with AIB, and I'm also joined by Donal Whelton, who's AIB Head of Agriculture, Food and Fisheries. You're both very welcome. Oliver, if I could start with you. Before we talk about trade and trade challenges, what's the overall macro picture now for the Irish economy? There's a lot of talk about a post-COVID rebound, a strong bounce back. Are we going to get that, do you think?
Yeah, well, we're one of the last economies to come out of lockdown, and we have the experience of other economies which are ahead of us. And we can see in those economies, particularly the US and the UK, that a strong recovery in economic activity is already underway. Now, we have data both here and elsewhere for the first quarter. And what's striking about the data is actually economic activity held up better than expected. So the declines we saw in GDP, that's output in the UK and the Eurozone, was far less than economists had predicted. And we saw stronger growth than had been anticipated in the US. And the reason for that is what the IMF calls, I think firms and business are where they're able to, are becoming better able to cope with what they call pandemic life, lockdown restrictions. So, for example, even here, the decline in retail sales in the first quarter we saw was nowhere like what we saw 12 months ago during the first lockdown. So, in those economies which are ahead of us, activity is picking up. If we turn to Ireland, we can see we have survey data on the manufacturing sector, on the construction sector, on the services sector. And actually, manufacturing has been recovering since the start of the year. We've seen a strong pickup globally in manufacturing activity. And we have these PMI indicators. And in the global economy, they've risen very strongly over the last 3 or 4 months. And that's been replicated in Ireland. I mean, the manufacturing sector actually remained open during this lockdown. So the PMI index actually for April was at a record high. Now, that doesn't tell you they're at record high levels of output. What it shows you is momentum is picking up very strongly within the sector. In the construction sector, we've seen a strong rebound in construction in April, again, as the sector reopened. And services is lagging somewhat, but compared to January and February, the readings for March and April have been stronger. And again, it's beginning to reopen the sector, and firms better able to cope with the lockdown, in terms of online sales, etc., remote working. So clearly, we're seeing signs of a rebound in economic activity. Some economies are more advanced than others. And in Ireland's case, that is beginning to gain momentum. And obviously, with the economy opening up the retail sector in May, we're seeing quite a bounce in retail activity there as well.
Given that there's all of that demand there, and it's getting ready, there are businesses, you see it through the Purchasing Managers Index and other indicators as well. Could there be a bit of a spanner in the works vis-a-vis the supply chain? Because are there still problems with supply chains internationally caused by COVID and Brexit?
Yeah, and there absolutely are, and that's actually manifesting itself in terms of higher inflation. You've got to remember that over the last year, large parts of various economies were shut down, including the production side. And demand can always rebound quicker than supply. So we have pent-up demand there. We have very, very high savings. We have very stimulative fiscal policies, very low interest rates. So as demand rebounds quite strongly, we are seeing difficulties in supply chain. Now, we can see that in the various PMI surveys, both from Ireland and elsewhere. We are seeing a shortage of raw materials. We're seeing a shortage of some inputs. And, firms trying to gear up quickly to meet this rebound in demand and finding it hard to source the raw materials. Eventually they will arrive. We've also had interruptions in terms of international trade, international shipping. Even the fact that the Suez Canal was closed for a week came through in PMI surveys. But in terms of international trade, what happened there, it actually contracted by nearly 10% last year. And it is recovering, but you just don't recover 10% overnight. So over the course of this year, international trade will recover. We'll see more flows of commodities into world markets. But it's absolutely true that the pickup in demand is running ahead of that of supply. And it is manifesting itself, as I say, in terms of higher inflation. We can think of the construction sector. We can think of the manufacturing sector. And again, in those PMI surveys, they're talking about input costs rising at the strongest level in over 10 years. And some signs in the manufacturing sector that's been passed on in terms of output prices. Now, people might have heard the central banks refer to, we do expect to see a rise in inflation this year, but we fully expect it will be temporary as the supply side picks up momentum, output expands, that price pressures will ease next year. So central banks are not going to, they're telling us we will not react. What we normally do when we see high price pressures, rise in inflation, you'd expect interest rates to rise. This time around, the central bank said that's not going to happen. This is purely a short-term phenomenon from our point of view. We expect inflation pressures will ease next year as supply picks up, and hence we won't be increasing interest rates this year.
When it comes to Brexit, Oliver, I'm tempted to ask the question, has it gone to plan? But nothing seems to go quite to plan with Brexit. How has it played out?
Well, it's obviously we got the trade deal at the end of last year, so that's avoided tariffs and quotas. So that was very, very welcome. But, we've always been advising that Brexit represents a fundamental change in the trading relationship with the UK. It is no longer, there will be delays at ports. There's a lot more paperwork. So there's a lot more administration costs in terms of dealing with the UK. It's now outside the customs union in particular, so you have to have customs union paperwork in place, even though there's no tariffs. So what we're finding, again from the survey data, is that firms are reporting, particularly in terms of goods coming from the UK, because the checks are more onerous at this stage on the Irish side. The UK hasn't fully implemented all the checks, or won't be doing so until next year. But importers in particular are saying there's delays. Ports, if I'm an importer and I'm sharing a container with 10 other importers, my paperwork is fine, but one importer's paperwork is out of kilter, it delays everybody. So we're seeing increased costs and increased delays in terms of dealing with the UK in terms of trade. So moving out of the single market and moving out of the customs union for the UK means it's no longer frictionless trade. Now, we can still trade with the UK, there's no tariffs, but it is, I think, it is not as smooth, it's not frictionless, there's higher costs and the delays, and that's what we're picking up in terms of the PMI surveys.
One of the things that Irish exporters, let's say particularly in the food sector, exporting to Britain, that one of the things they want to watch out for is the performance of the British economy itself. To some extent, has the UK and ourselves here, have we been insulated a little bit by a lot of the state spending around COVID and the pandemic? So we might not have seen the full impact of Brexit, let's say, on the British consumer.
Yeah, well, ahead of Brexit, there was two scenarios. If there was a hard Brexit, no trade deal, we would see the effects very, very quickly in terms of tariffs and quotas, etc. Where we saw a trade deal, the effects become more obvious over time, and it's a slow build. So the research done by the ESRI, done in the UK, would suggest that output might be about 3% lower over a 5-year period. Now, when you think of economies, that the growth rates we're seeing down 10% last year in the UK, maybe up 7% this year, Brexit actually gets lost in those type of figures. So it's only when economies settle down post-COVID and in a number of years' time, we'll actually begin to see the full effects. But as of now, really the driving force behind economies, first of all, was the lockdowns last year, the impact of COVID on the economy. The 10% fall in UK GDP was the biggest in over 300 years. This year, the economy will rebound very strongly. So let's say Brexit knocks 0.5% off the UK growth rate. You won't even see that. I mean, it's still unclear whether the UK will grow by 6, 7 or 8%. But I say over time, the impacts are from higher trading costs from delays, is that over time, less trade will get done with the UK and we'll probably diversify away more to European markets or other markets. That's how it impacts, and it may impact an investment as well. And again, that happens over time. So, you're absolutely right. The effects won't really be felt this year. There may be for some producers who are particularly exposed to the UK or particularly niche markets, but overall, it's over time you see the impact on trade and investment from these type of changes in trading relationships.
And when talking about the trading environment, things have changed, things have got more complex, and it's not just about Irish-UK trade. So, for example, if the UK does new trade deals with other countries in other parts of the world that might involve access to the British market for food, Could that impact on Irish exporters looking to sell their produce in the UK if there's cheaper alternatives there?
Well, I think the food sector in particular is front and centre here. I mean, 40% of our food exports go to the UK, and we are protected by higher tariffs within the EU. The risk going forward for food producers is the UK strikes trade deals with economies or countries like New Zealand, Australia, countries in South America, and gives them access at what we call world prices or lower prices to the UK market, thereby undercutting their own farmers and food industry, but also obviously undercutting exports from Ireland in terms of prices. So that's a risk going forward for the sector. And it's been called out, and really the strategy there trying to respond to that is to diversify away as much as we can from the UK market. Now, we've been doing that over time, and I think that's got to continue. And also, particularly if you diversify into mainland Europe, you also remove the currency risk, because sterling has been a very volatile currency over the last number of years. But if you're exporting into mainland Europe, France, Germany, Holland, those sort of countries, it's in euros. So your currency risk is gone. And it's much easier to plan for your business in those sort of circumstances. Now, it does take time to build those markets. And obviously, we don't share the same language, so it's more difficult. But, in terms of, I said, there's been a fundamental change in the trading relationship with the UK. It's now outside the customs union and outside the single market. And, we may well see trade deals negotiated in the coming years between the UK and what we call third countries that make it much harder for Irish exporters, particularly food exporters, compete in the UK market.
When it comes to currency, I think in the early stages of Brexit discussions, there was a fear that around a hard Brexit that sterling would fall even further potentially. It hasn't really happened. How do you see the way the currency shifts have played out?
Well, I think the view was that if we didn't get a trade deal, that would be very negative for the UK economy. They might even go to negative interest rates, and sterling would fall further. There was talk of even hitting parity against the euro. On the other hand, the expectation was if sterling fell sharply after the referendum result 4 or 5 years ago, the expectation was that the sterling would recover some ground in those sort of circumstances. And that's what's manifested itself in the opening months of the year. Now, the quick rollout of vaccines in the UK and the upgrade as a result to growth forecasts of the UK economy have also helped sterling. So sterling started off the year around 90p. It didn't move very quickly in the immediate aftermath of the trade deal, but over the opening quarter of the year, the euro fell back to about 85p. Now, that was a general up move by sterling. Since then, it's been largely range-bound, and that's been more or less in line with expectations. We had felt the euro might fall back to 86, 87p, and that's where it's been trading out over the last couple of months. So it's been in line with expectations, and I think sterling has been helped by the rapid rollout of the vaccines there. That's taken, actually, if you go back to the start of the year, markets were talking about negative rates in the UK. Now they're talking about rates being raised within a year, by the middle of next year in the UK. That's quite a turnaround in terms of rate prospects, reflecting the improved outlook for the economy. And that has helped sterling recover in the earlier part of this year.
Finally, Oliver, again, just on the macro picture for Ireland, 2020, fastest growing economy in the EU, ultimately, in terms of the headline GDP figure and all of that. Can we sort of retain that performance, 21 and into 22, in terms of the strength driven by our exports?
We need to break that down firstly. In terms of last year, you're right, we had a growth rate around 3.5%, but all that was driven by the multinational sector. And we were very fortunate that sectors which performed well last year, I'm thinking of pharma, medical care devices, the ICT sector, all those sectors did very well in the US stock markets. Large presence here, very strong export performance despite that contraction in global trade. So as a result, the overall GDP increased by 3.5%. But when you strip out that multinational sector, the domestic economy contracted by 5.5%. Now that actually was much better than elsewhere. The UK contracted by 10, the Eurozone by about 6.5%. So we're more aligned probably with the US. Now, looking to this year, growth forecasts have been revised up over the last couple of months, really on the back of two things. Going back to what I said earlier, the contraction in activity in the first quarter was not as severe as had been anticipated, And secondly, the rollout of vaccines here and elsewhere has been quicker than anticipated, and it's laying the foundations for stronger global growth and also a quicker rebound in the Irish economy. So if you go back to March, you would see forecasts for the Irish economy around 3%. Now they've been upgraded. You look at the Department of Finance, the Central Bank, the ESRI, more recently the IMF, they're all talking growth rate this year around 4.5%. And that includes a rebound in the domestic sector of the economy. Still a good performance by exports as global trade improves, but the domestic economy rebounding. Now that rebound really is from May onwards. It's almost like a second half of the year event as the economy reopens. The domestic economy still contracted in the first 3 or 4 months of the year. So it is a second half of the year story, starting to recover in Q2, and then very strong momentum expected in the second half of the year.
Okay. Oliver, thank you very much. Donal Whelton, AIB Head of Agriculture, Food and Fisheries. What are the main challenges that food businesses have faced throughout the past 12 months?
Yeah, Richard, I think we all recognise that it was a very intense and challenging year for all businesses, not least in the food manufacturing sector. But I think one thing that shone through was the resilience of the food manufacturing sector as they dealt with those challenges that they faced. And I think the first challenge, and again, it was similar to all businesses, the first challenge that food businesses had to face was ensuring the safety of their staff and putting the appropriate workplace practices in place, such as hand sanitising, social distancing, staff rosters, all had to be dealt with very, very quickly. I suppose following that then the next challenge, and Oliver alluded to it there in his comments, was trying to ensure that supply chains remained open. Whether you are an import business and trying to get access to ingredients for the product that you wanted to produce, or indeed if you were an export business and trying to get your product into markets that you had pre-COVID. And again, I think for a lot of food businesses, this was very evident very early in the pandemic, because we export 10% of our seafood product into China. A lot of our pig exports go into China. So very, very early in the pandemic, this was impacted these businesses. And of course, this very quickly escalated as the pandemic spread right across the world. And then following that, I suppose the next challenge then that a lot of businesses had to face was trying to repivot their business with the closure of the food service and the hospitality sector. Businesses had to repivot to try to fill the increased demand from the from the grocery and the retail sector. And again, this led to maybe a lot of increased costs in businesses, erosion of margins. And we have this challenge now again as businesses try to repivot backwards with the opening of the food service and the hospitality sector. So I think overall a lot of challenges to be faced were faced by the food manufacturing sector. But what shone through certainly was the resilience of that sector in the past 12 months.
So you're of the view that, in a broad sense, that they got through those, they navigated those challenges quite well. How did they manage them, in your view?
Yeah. Yes, Richard. I think first and foremost, I suppose a number of businesses would have availed of payment breaks, of our customers would have availed of payment breaks. But I think it's fair to say that the percentage of food manufacturing businesses that availed of payment breaks was relatively low. And in a lot of cases for those businesses, it was very much taken as a precautionary measure to preserve liquidity or preserve cash reserves within their business because of the fear of the unknown and not knowing what was going to happen with the pandemic. And we certainly saw that a lot of these businesses actually transitioned back to their original capital and repayment structure once payment break one ended. I think also it's fair to say that for businesses where we have the final year accounts and the financial up-to-date performance, they've actually outperformed and surpassed our expectations that we would have projected for the business at the outside of the pandemic. And that's in no way to say or to underestimate the amount of hard work that went on in those businesses, as I mentioned, as they faced the challenges and faced those challenges head on. And I think it's reflective in the final year's accounts of the businesses that we have. Another thing that was relatively obvious from us from a banking point of view was a lot of investment decisions that were planned throughout 2020 for food manufacturing business were actually put on hold. And that's not surprising, as obviously efforts were put towards meeting those challenges that I spoke about. And hopefully in the next number of months and years that we'll see those investment decisions proceed on those businesses.
Okay. Donal and Oliver, thank you very much, and you're going to stay with us for the next part of our discussion. I'm delighted to welcome by live link Pascal Bolger, Managing Director of Colchita Limited, and Siobhan Lawless, Founder and Managing Director of Foods of Athenry. Thank you very much for joining us. Siobhan, if I could go to you first, just tell us a little bit about your business and about some of the challenges, I suppose, that you faced over the last 12 months.
Do you want the long story or the short story, Richard?
Give us the good story.
So we're based on a farm in the west of Ireland, just outside of Athenry. And when I was young and innocent, married a dairy farmer. But by 1999, we were struggling. So by 2004, we had sold the cows and we moved from full-time agriculture to full-time bakery. So we manufacture in converted farm buildings. So we started off what we call in standard bakery, wheat-based products, etc. And then by 2010, we added on a dedicated gluten-free bakery to cater to gluten-free, dairy-free or vegan free-from type products. And that's important because we kept the other bakery just because we had it. And that was one of the things that really stood by us as the years went by. But now we operate out of approximately 25,000 square feet, have about 25 staff, export to maybe 12 countries around the world. And we sell into retail, food service, gifting. And we also do private label manufacturing for Irish retailers in the wheaty bakery, as we call it. So for us, there were a lot of challenges, all very clearly detailed there by Donal, in terms of the worry and the stress and the social distancing and the space, etc., etc. We lost all of our food service business. We were lucky we weren't overly reliant. For us, maybe it was probably around 30% of turnover at the time. And I felt lucky because I knew businesses that were up on 80 and 90%. So we pivoted and we looked at where the kind of the wins would be. And during the pandemic and the lockdown, there was different wins and different losers in terms of consumer preference. So say, for example, because you could no longer go out for food, one of the wins was ethnic food sales, maybe alcohol, unhealthy treats, because we were buying more chocolate and crisps and obviously drowning our sorrows. None of those categories that we were in, but one of the other winners during the pandemic was breakfast. And we obviously also make breakfast cereals. And we found that the sale of breakfast cereals really increased, and we manufacture, as I say, breakfast cereals for Dunstores and SuperValu, Aldi, and the sales of those really rocketed. So as part of the re-looking at where we were, it was go back to the retailers and sort of see where we are. And we launched a couple of new products with them over the course of last summer, which really helped us out. So at the start of the pandemic, we envisaged turnover being down probably 35%, 40 maybe at the end of the year. And on rolling forecasts, it stayed like that for a few months, and it was pretty sad to look at it. But little by little, we pulled it back towards the latter end of the year. We actually finished out pretty much on the same turnover as we'd had in 2019. So we were happy enough with the way the year panned out for us.
Siobhan, that's well done and a fascinating story. You responded really well to it, and we can talk a bit about the trading environment and Brexit in a moment. But Pascal Bolger of Colchita Limited, just tell me a bit about your business and what you faced over the last 12 months.
Good afternoon, everybody. Delighted to be here. Colchita is around now for over 50 years. Started off as a community development company here in the town, making lace and stuff, and transitioned then quite rapidly into making ethnic clothing, and developed onto making cushions for a local company in the garden furniture industry, because fire regulations changed in Britain and Ireland, and it's mid-80s we became involved in the garden business. So we've transitioned from different industries. And in the last 25 years or so, we've been dedicated more so to garden furniture and the associated business. We did some corporate clothing also in there, some nice clients like Aer Lingus and some of the bigger people, but we're now focused completely on garden furniture. It's been tough. We've had some very tough times. Demand is great at the moment, as you can well imagine, and last year was very stressful. With the demand being partially closed, higher costs, staff problems, but we've battled through. We had a very good year last year. Brexit and the COVID have obviously brought their own problems, but we've come through fairly well. I'm just not as confident as maybe Oliver is in the world economy and the global economy. I can't see it changing so quickly, particularly on the supply lines for the likes of us from the Far East and even Europe. But we don't know. We have to think positive. And
Pascal, just dealing with Brexit there, you mentioned about Brexit. How reliant is your business on the UK market, and how have you looked at changing that? How has it played out for you?
Yeah, we're very reliant on the UK market. We've an enviable, I suppose, client list, but there's no loyalties, and it's very difficult for the past 18 months to have a relationship with even buyers and clients because there's no travel. But we did all the right things. We have our non-residential VAT numbers, and we did all the things, went to the revenue webinars and that. We were lucky in the sense that we were doing delivery duty paid from the Far East for a long number of years. And we actually just reverted back to doing what we were doing for the last 10 or so years. We found some of the, to be honest with you, we found some of the guides very fumbled and inaccurate. So we're just invoicing as we normally have been doing, except everything from Ireland to the UK now has VAT. One major thing that happened, we were very much concentrating on getting perhaps and setting up a distribution, maybe even a manufacturing plant in the UK, but that didn't happen purely because of Brexit and because of COVID. We'd even employed some extra staff in preparation to develop that because we see a very big. We would have seen an opportunity there, especially for distribution in the UK. Okay. So it's had its. We've come through it. The problem for us at the moment is mostly distribution end of it. Basically, we find the customers just don't want to know whether the customs in the UK are blocking products We're getting a lot of fines for. We have very strict delivery times, containers today. Last week we've had one day we had 6 non-deliveries. It's not always the transport company's fault, but I'm fined practically for all of those non-deliveries if they don't reach the customer on time.
And when you say it's not necessarily the transport or the trucking, is that just a fact of life around Brexit? Do you see that will improve as time goes by? Some of those systems will get better?
I'm unsure, to be honest with you. We're very reliant on local. We're very lucky that we have some of the biggest transport companies within a mile of here. So we're very lucky that we can pull on their resources. They're like guys with hundreds of trucks and trailers. But they're all struggling to get drivers. In the UK, they're struggling to make times. Today is an exceptional day with the weather, but also Stena Line is also down now. So that will be a big impact for the likes of us and for exporters to the UK. I think distribution and transport have been, apart from the raw material and Brexit and COVID, distribution and transport have been our 2 biggest issues this year.
Okay. Siobhan, just a bit about Brexit as a food business and how exposed would you be to the UK market and how has it gone for you?
We wouldn't have been very exposed. We had a couple of contracts that were due for, say, renewal maybe a year and a half ago, and I actually opted not to sign up one of them because of all the things that could go possibly wrong with Brexit. So in the UK at the minute, it's primarily through third-party distributors who supply into kind of high-end retailers and independents. And for us, that market is not as price sensitive, and the customer base is strong. And also, that was one sort of retail sector that thrived very much during COVID. So we wouldn't have been very exposed.
And what about new markets and looking at new opportunities that might arise out of these new trading relationships? And are you looking at continental Europe?
We already supply into continental Europe, and we do a bit into Australia and the USA. So they pretty much battened down the hatches last year in the same way as Irish retailers did, if that makes sense. People were risk adverse. The retailers themselves and the buyers were very much focused on keeping product on the shelf and keeping the consumers supplied. So they worried themselves more with that sort of information than they did with, will we launch some new stuff because it might be interesting, because the way the consumers shopped was different. I mean, I'm sure you've been in stores where once upon a time you might have picked up 5 packets of sausages and looked at them all copiously for a really long time, and now it's just like in the basket, because you're aware that there's somebody coming up behind you who wants you to move on, and they don't want you touching all the product. So consumers are inherently shopping differently. So it wasn't the best time for launching new products anywhere, really. So we had some contacts of people we had met previously through trade shows or just chasing them down. And then they just sat on the back burner, and we've recently restarted conversations with those and have some first orders gone into a new customer in Texas and a new customer in Holland.
And are you importing any raw materials from the UK? Have you had any issues around that?
Yes, I am. And yes, I have had a little. I think in general, Irish food companies were quite Brexit ready, because we had a lot of access to information through the likes of Bord Bia, Enterprise Ireland, the enterprise boards, so we were all very much au fait with what was happening. So as part of our own Brexit strategy, we moved the importation of a lot of raw materials from the UK to European suppliers. And that we had done way in advance. So we already had a substitute in place. The suppliers that we opted to stay with in the UK had something uniquely different for us that we wanted. And so we continue to import those, and we've not really had an awful lot of issues. The cost of importation is higher. We generally do an ex-works, we pick it up, because then we find we have less issues if we actually take responsibility for getting it through customs, as opposed to leaving it to someone else to look after it for us. So the only issue we've had really on it is the increased costs of bringing it in.
Sure. And Oliver, on the question of increased costs, we know that when it comes to Brexit, the UK decided to take a phased approach to bringing in new checks. By and large, they've let a lot of stuff go into the UK in order to keep trade open. Those are going to be phased in, I think, from October. Do you think that might be a bit of a drag on some of the economic activity, especially for the food sector?
Well, not so much a drag as a hindrance, in terms of there'll be increased costs, there'll be delays. So you are right, the UK was not as prepared as Ireland was for Brexit. So most of the impacts this year have been felt on the import side. Next year, it'll be the exporters' turn to feel the pain. And it'll be the exact same, issues in terms of delays of ports, increased administration costs and frustration. It's this word frictionless trade was tossed around a lot in the UK. We still have frictionless trade with the EU. It simply does not occur when you're outside the customs union in particular. So I think for exporters, there will be increased difficulties in terms of trading with the UK next year. So, but they're costs you have to absorb, maybe try and pass them on. You'll still be able to trade freely with the UK in terms of there won't be any tariffs, there won't be any quotas. It would have been a hell of a lot worse situation if we had no trade deal. So certainly for exporters, they need to be prepared for that eventuality in 2022.
And Donal, when it comes to food businesses and to AIB itself, in terms of finance options, how can AIB support businesses?
So Richard, in AIB, we operate a relationship manager model where businesses have a dedicated AIB person, a relationship manager or a business advisor who's there to support them in their day-to-day banking requirements. And we underpin this then with our sector team who provide insight and outlook to the bank and the appropriate risk appetite so that we can provide the right support to the businesses as mentioned here and the customers here spoke about at any particular point in time. In terms of finance options available, I suppose what's noticeable over the last number of years has been a significant increase in demand for government-backed loans, such as the Future Growth Loan Scheme that we had available, where customers could avail of terms between 7 and 10 years and a relatively high level of unsecured finance. And currently also available is the Credit Guarantee Scheme, underpinned by the Strategic Banking Corporation of Ireland, and is there to support businesses that had been impacted by COVID. And I'd encourage any business to go onto the AIB website to see or get more details, or indeed contact any AIB branch to get more details on what government-backed loans are, actually what products we have available through the SBCI. In terms of working capital facilities, then we continue to see strong demand for our business credit line products and also have available invoice discounting facilities that is there again to help businesses with the day-to-day working capital requirements in their business. So again, look, in AIB, I suppose there's no one solution that will suit every customer. So we have a range of options that are available, whether it's term finance that a customer requires or working capital facility that a customer requires. I'd encourage them to either talk to their local AIB branch or visit the AIB website to get more details on the options available to support their business. And
amid, Donal, all of this change, particularly around Brexit and trading relationships, companies are looking at new markets. Siobhan's talking about new customers maybe in America, in the Netherlands. Does the bank see many opportunities for food manufacturing, food processing businesses?
Yes, I think we have a very positive outlook for the sector. I think as we all know, there's an increasing world population that's going to lead to an increased demand for food. And I think many Irish food manufacturing businesses are well placed to contribute to that increased demand. I think if you look at the performance of food manufacturing businesses, such as Siobhan's here, over the last 20 or 30 years, and the research and development and the innovation that they have showed to have many world-leading brands available in many markets right around the world, augurs well for food manufacturing businesses. And I think the panel discussion here also this morning really highlighted, I suppose, the competitive advantages that many businesses have. We've discussed the resilience of the sector, the ability of the sector to respond to challenges, the agility and repivot their businesses to respond to challenges that they face. And I also think we have a reputation for producing green and traceable food. And also I think as I mentioned, we have a strong innovation capabilities that will serve us well in the years ahead.
Okay. And finally, if I could go just to our two business people here, Pascal and to Siobhan. Pascal, first to you. You did at one stage look at maybe setting up an operation in the UK. You decided things got in the way of that. I'm thinking overall, how optimistic are you, or do you feel you can be, about where the business is at now for looking ahead for the rest of 2021 and into 2022?
I'm very optimistic. I have to remain optimistic. I think the word resilience and has been used a lot there. I think what Siobhan has done is wonderful, and we have to keep battling on. I would like to think in the future that we would extend our marketplace. We have a very good product to offer and a very good service. And I think Irish people in general have a very good resilience and a very good forward thinking and a very good name for being honest and good, honest business people and fair. And I think that if you're fair with people and think positive, I think you get a long way, you can go a long way.
And Siobhan, for you, it's been an extraordinary 12 months, I think, for so many businesses. But as you recounted your own story there, when you take stock of where you're at now, are you optimistic about the rest of this year and next?
I'm a glass half full sort of person, Richard, always have been. I drive my financial controller mad. But part of that 25,000 square feet that I said we're operating out of, 5,000 square feet was actually only started last year with the help from AIB. So for us, that was to allow us to social distance by increasing the size of the bakery, but also to allow us to have larger warehousing so we could stockhold more ingredients in to keep the cost down, and also then for expansion. So we didn't add on that extra 5,000 square feet if we weren't optimistic. But quietly cautious at the same time. But yes, we are optimistic. But with that optimism, comes a lot of hard work, being resilient. And I agree with everybody. Irish people are very resilient, and we are sound as a pound, as they say. But being resilient is exhausting sometimes.
Well, thank you very much, Siobhan Lawless, founder and managing director of Foods of Athenry, and also to Pascal Bulger, managing director of Colsita Limited, and to Oliver Mangan, chief economist with AIB, and Donal Whelton, AIB head of agriculture, food and fisheries. And that's it from this sectoral focus event. I hope you've enjoyed it. Lots of change out there, but also hopefully lots of opportunities too. Until the next time, thank you.